Yeah, what's up guys, Juko here, welcome back to another video. Today my hair is completely fucked, but this is why I lost $303 today. They traded in the Nasdaq, and today was actually quite early, and yeah, just from my side, I knew exactly where the market wanted to go, but I just wasn't able to capitalize on that. So let's go through the bias and everything. So first of all, 4 hour, we mark our 4 hour highs, and then we don't really have much. We have the solar lows down here, but then the more important thing is really if you go and see the sessions, what the market is doing is basically long session open, we manipulated Asian session highs and all these highs as well here. We reversed out of that. So what are we expecting? New York session continuation. So we have long session manipulation reversal. We are expecting New York session continuation. So my bias was bearish, completely bearish on market open. But market opens, we shit the bed completely. I was expecting market to open, sweep out this low resistance, low time frame liquidity, and then reverse out of it. But market just shit the bed. So what happened, especially on Nasdaq, as you guys can see, on Nasdaq, we have this bearish S&P as well, pre-market as well. And price just shit the bed once it opened. You know, I can show you guys that, just completely shit the bed, and that was basically it. So it takes out Asian session lows. It takes out not only these hourly lows, it also takes out these Asian session lows, and then keeps going down and down and down. And we are actually feeling a 1 hour fair value gap right here, which is actually a 4 hour as well, fair value gap, boom, right here. So for me, I'm like, okay, my bias was bearish, but we already moved pretty drastically to the downside. I'm expecting at least some kind of, and not only that, price is super overextended, so I'm expecting at least a retracement into equilibrium. And after that, after retracement into equilibrium, I'm expecting a little bit of a reaction to the upside, even though we are bearish in the high time frame. We are completely bearish. We are forming. We just created a higher low. This is a higher high. We formed a higher low, so we are completely bearish to the downside. I'm at least expecting some kind of retracement up, so that I can catch, some profits at least for this equilibrium, this fair value gap, and this move down. If you can find some kind of entry, that will be mega. And what I was basically doing is I was in 1 minute on the Nasdaq and also on the S&P 500, and I was just waiting for an entry, some kind of entry, and that was basically it, And on ES we don't get nothing. Prices moves up, and up until it makes these 3 relative equal highs right here. But it's a shame, but it is what it is. But no entry. And on Nasdaq, if you go to 1 minute, I was expecting, of course, a break of structure followed by a fair value gap, and that was my biggest mistake. I was expecting like break of structure followed by continuation confluence, but followed by a confirmation confluence. And that was too much to ask, especially for what I was expecting, which was, we need to think about, we are bearish on the high time frame. What I'm expecting is a low time frame retracement, so that we can continue move down, so that we don't move down. So I'm actually trying to catch a small move. So like, if you see a downtrend, we make move down, then we make a small move up, and then we go down again. So in this case, it's actually because we formed an SMT, but right here you can see. So from big move down, then a small move up. So like big move down, small move up, and I was expecting catching the small move up. That was basically what I was trying to catch, which was not a good idea. But yeah, it was exactly what the market did. I knew what the market did, just couldn't capitulate on it again. What was my entry? My entry, I can explain it to you if I can. So my entry was really followed by, we have this 1 minute fair value gap, we have a retracement into fair value gap, we have a reaction, we have a kind of reaction of that, enter on that. It's completely fucked my risk reward ratio. First take profit was on this start of this fair value gap, right here, and we catch partials, and we stop at break even. Then we go to 5 minutes, because I was actually, my plan is like, okay, if I can catch the move starting, but this is more to high time frame. Like, don't learn anything from this, because this is a way aggressive entry. You guys shouldn't be trading like this at all. Like, I was trading aggressive because I knew what the market wanted to do, but if I was going to trade a low time frame retracement, I should have been way more aggressive in my entry. But I'm just explaining the trades, then I'm going to explain what should I have done better. I go to 5 minutes because we already stopped in 1 minute trade, and we have this 5 minute fair value gap, which gets respected. So we are filling this 5 minute fair value gap. We get a break of structure out of it. Not a break of structure, but you get this inverse fair value gap out of it, and I enter on that. I get stop loss below a little bit the fair value gap, and I get completely stopped. And even if my stop loss was down here, I would have been stopped anyway. So just what happened wrong? I was expecting a small retracement into a small retracement up, nice. But if you are expecting a small retracement up, not because the trend is a downtrend, this is not like a shift of trend that normally happens. Why are you in the 5 minutes? Why are you waiting for a 5 minute confluences if this is just a small retracement that you knew that was going to happen? And that was exactly my mistake, you know, like the entry in 1 minute was decent, sure. But, you know, honestly, I should have been way more aggressive. This wasn't decent as well, because I was expecting a small retracement up. I should have been way more aggressive on the entry. So again, like for me, what would have been a better entry, and it was actually what TGR did, was just, you know, wait for big confirmation. So once I saw, like, for example, once I saw like the Fibonacci retracement here getting disrespected, so on the 79 level, boom, on this candle, not only that, we are forming a 50 second, like, that was more what TGR said, 50 second bullish SMT right here. Like a small SMT, like down here. As you can see, this candle is quite a bit low, and this is a little bit high, and this is just right here, and then this is down the way around here. So we're creating a bullish SMT on the 50-second time frame. Again, like don't say that, don't really be like that, but I should have been way more aggressive with my entry. I should have entered like either on break of structure down here, boom, or after this rejection of a value gap, I should have entered it as well, boom, up here, and then again take profit one would have been a much better risk to reward ratio right here, boom, 0.87. So again, much better than what the fuck I had right here. But again, like I should have been entering like on this candle, then stop loss down here, and then take profit one on this level gap again. But this is not the trade that you should be wanting to take. Just just a shitty yesterday. Even though ES looked much better and almost did this take profit, which is very good. But on Nasdaq we have absolutely nothing, which is completely garbage, to be honest. But yeah, just I entered out of that, and that was where I had the entry. But to be honest, I should have way looked into the SP 400, maybe look for an entry there, because we have these highs and these highs, which was a much better entry, because we have these highs, so we have the liquidity, while in Nasdaq we only have a rubber gap, which is not really great. So again, you know, I journal about it. One thing to learn is if you want to be aggressive, you need to be aggressive with your entry, place it down here, and then take profits, you know, like this, much better risk reward ratio than what I had, you know, like, and be more aggressive. You need to go to lower time frame, not on 5 minutes, because if you are expecting a small retracement, why are you in the 5 minutes? 5 minutes is only for big rotations in direction of the market, big inversions. Why are you in the 5 minutes when you are expecting a small retracement? That was my number one mistake. And yeah, that was really the shit that I did today, just that big ass mistake that I made. Second trade was just based on 5 minutes. You know, again, like I said, but again, you know, if you are expecting a small retracement was done. And not only that, the mistake that I also did, I should have traded the S because of this draws liquidity, especially this relative equal highs. Even though there was no entry, that's why I traded on Nasdaq, because on Nasdaq at least I had an entry into a value gap in 1 minute. On ES, I completely had nothing. But these days, again, like, are things to avoid. And now I'll tell you like the trade that you should have really taken. So the bearish is bias, we create this bearish SMT. Not only that, lower session manipulation, New York session reversal, lower session manipulation reversal, New York session continuation. So I was expecting what? To manipulate and then reverse. We don't manipulate in reverse, but what we do? We move down, sure, but what are we waiting? What should we be waiting for? A retracement. A retracement into what? So let me clean this up so that you guys can see what I'm talking about, because the move that you should have done is like a bearish trade, because if your bias is bearish, you should be bearish from the day. And that was my big ass mistake, you know, like I was bullish. I did the first trade, it take profit one day break even, and then from there I should have been able to see, okay, what's the bias of the day and what are we doing, because the retracement is already done. And for me, I should have seen that, but I did not. And that was my number one mistake today, really. So we come into this 5 minute value gap, and then after that just execute, because we already have manipulation, we have reversal out of it, and then right here just like inverse value gap, boom, you got inverse value gap right here, boom, enter on that bitch, honestly. And if you want more confirmation, okay, you got inverse value gap, then what you have, retracement into 1 minute auto block, 1 minute breaker block right here, boom, also 1 minute value gap up here. Let me zoom the chat so that you guys can see. I'm actually uploading this video in 4K so that you guys can see the chat a little bit better. You know, we have retracement to literally everything. Equilibrium, boom. This is a mess, but okay. Boom. After that, we got a kind of reaction of that. Two favorable gaps that are inverted. Boom. Enter on the beach. Stop loss. Maybe equilibrium on this favorable gap. Take profit, bro. Take profit one will be literally down here. Boom. On 5 minute loss. 1 to 5 risk reward ratio. Take profit 2 on this equilibrium, boom. Take profit 3 on the equilibrium for 1 hour favorable gap, boom. 1 to 2 risk reward ratio on the end of favorable gap, boom. 1 to 4 risk reward ratio. And then if you have to be real with it, we have this equal lows down here, which these relative equal lows on the high time frame, 1 to 9 risk reward ratio. bro, like, what do you want to say? And a friend of mine actually took this trade, which is completely crazy, bro. Which he's a beginner and he's already making these banger trades and watching the market and be patient. And that was what I was not today. So yeah, that is it for the day. So I hope you guys enjoyed the video. Just a trade that I should have taken. Why should I not take it on ES? Just because ES created all these relative equal highs, and which is really easy liquidity to grab. So I was quite, if market could easily go there, sweep everything, and then move down. But while on Nasdaq we're just sweeping, we are just filling fair value gap, 5-minute fair value gap to make the move down, which was much better. Not only that, also lagging index on the S&P. So yeah, that's basically it. I learned a lot today. If you are number one, if you are on the low time frame. If you are expecting a low time frame retracement against the trend and you are trading that, you should be on the low time frame. Not only that, you should be more aggressive with the entry because you're expecting a low time frame retracement. And if your bias is to one side, stick to your bias and be patient. Because the market could easily give you, and you need to remember that bias because the market could easily give you the trade that you are looking for, and that was what happened today. So yeah. Again, maybe my trade would have worked a little bit better if we feel this equilibrium of the high time frame this move up. So if you feel the equilibrium, maybe retracement would have been bigger, like this one down here. Like we feel the equilibrium, we feel also almost everything out of the gap, and as you can see, this was a much bigger retracement. And again, like this retracement down here, it was actually the perfect setup, So if you want to be real with it, so we got the versatile gap right here. Boom. We got inverse level gap. No, we actually get the break of structures. So let me try and show you guys. So we get break of structure, up here, boom, break of structure. Not only that, we move lower and we want to fill. We feel equilibrium, boom. What we feel? We feel also this 1 minute level gap. No, it's not level gap. But we feel equilibrium on 1 minute and no other block, no break of block, no fair value gap. So only equilibrium. Then I wait for usually a reversal value gap or break of structure. We get a reversal value gap here, boom. Enter on that beach, enter literally on that beach, boom. And this is the retracement you should have looked for. And then first take profits on these 5-minute highs, 1 to 7 risk reward ratio. Then on this another 5-minute highs, boom, 1 to 2.4 risk reward ratio. Much better trade. And this was the kind of retracement that I was waiting for. And again, like in the 5 minute, there was absolutely nothing probably. Yeah, maybe an entry into this 5-minute fair value gap. So there would have been a trade on the 5 minute, but as you can see, it was very short-lived. So you can enter this, boom, kind of reaction or break of structure. You got a break of structure down here, up here, boom, break of structure, stop loss a little bit below the 5-minute value gap, boom, and then take profit on these 5-minute highs. Boom, 2.3 risk reward ratio. This was more the retracement that I was expecting to happen up there. It happened down here, but it happened. When you move down, you always need to have some kind of retracement, especially when price is overextended. And this was what I was expecting. If the move in the market open was like this, it would have been a much better day to me, but again, it is what it is, and these kind of losses, again, like this week is not a very good week for me so far. It's not horrible for sure, but it's not a very good week. But these weeks are the best for you guys to learn and improve on it. Like I'm doing a lot of mistakes. I'm learning a shit ton of stuff, especially since Tuesday. I've been backtesting a lot, learning a lot of stuff with my strategy, and when to execute on 1 minute, when to execute in 5 minutes. And today, I applied my strategy right, but it was in the wrong environment. That's why I lost today, because I was applying the strategy right, but not in the right conditions. And I learned that as well, And again, like when you are trying to catch a move at the start, you go to the 1 minute, and then if the price moves already too much, you go to the 5 minute, and then wait for the price to retrace and enter on that. And today, I did exactly that, but I needed to remember myself, which I did not, because I was too stuck on that plan, to remember that I'm trying to catch a small retracement up, not a big movement up, because the trend is downwards. So I should be catching a retracement into a fair value gap or into sweeping some liquidity, which we did on the S, and that was the move that I was catching. So why are you going to the 5 minute trying to catch a high time frame rotation when the rotation is happening low time frame? That was my biggest mistake, and this is probably the video that I learned the most with mistakes, because sometimes it's silly mistakes, but today was just a mistake of contextualizing everything in general, and I learned a shit ton, bro. My notebook for today is literally 3 fucking pages of journaling, because how I learned so much, because today was a really tricky day, for sure. But it was 100% worth day, and I learned a lot. And again, like these mistakes, these small losses, because I didn't risk much, like today wasn't a huge loss compared to my wins. Like I learned a lot, and these losses are okay because the money I'm going to make from the losses after with these lessons, it's way more than the money that I lost today. And like again, like my bias was bearish, I should have entered on a bearish trade right here, boom. And even if because I entered on the retracement, not only I should have been trading on the S&P 500 because we have all this liquidity on all these highs, which are actually attainable, like this 1 minute highs, this 5 minute highs, which actually made more sense than Nasdaq, which we only had for value gap. And I was managing my position based on start of a value gap, the equilibrium of a value gap, and the end of a value gaps. It's better to trade off liquidity because our strategy is based on liquidity. It's all about liquidity, high time frame liquidity and low time frame liquidity. Low time frame manipulation up to high time frame draws, or high time frame draws up to low time frame draws, up to high time frame draws eventually. So yeah, just especially very deep video. Hope you guys enjoyed this one, like a shit ton of content. Hopefully I didn't talk too quickly for you guys. A lot of information I tried to process into you guys, but today was just crazy day for me. Didn't lose much, of course, it's always a loss, it's always a shame, but crazy day, and I learned a lot. And like bro, like these losses, bro, makes you learn so much and makes you improve so much that I'm actually happy with taking them, and I sound kind of an idiot saying this, like I'm happy to lose, which is not great, but it makes me open my eyes. Like I was trying to catch a retracement, I was correct about it. The retracement did happen after we see essential lows, and then all these liquidity lows, we have nothing to the downside up to these lows, so we need some kind of retracement up to go lower again. And like same thing happened here, even though we are also creating a bullish SMT out of these lows, when we retrace them. So out of that, I need to act based on that. So I'm waiting for a retracement, especially on Nasdaq. I traded based on that. It was not a bad trade. The fact is, I should have been way more aggressive with my entry and way more certain, like that was basically it that happened. And if you want a small retracement on small time frames, be aggressive with your entry, and do not go to the 5 minutes waiting for continuation of that retracement, because the retracement when you are looking at the 5 minutes for a continuation, it's already done. The 5 minutes is only for right time frame reversals, like these big ones, like boom, we have SMT, then we also have break of structure, then you go to the 1 minute and try to find something else, and try to find like some kind of retracement or anything, or even you have everything here, you have boom, this of course is pre-market, but the same thing applies. We have bearish SMT form, then we have what, retracement into equilibrium, boom, right here we go to 1 minute. So we have 5 minute confirmation followed by 5 minute continuation followed by 1 minute what confirmation, bro. Got to break of structure right here, boom, break of structure right here on this candle down, you enter on that, bro, like long silver, bitch, bro, literally short that bitch up to the draws, that liquidity that we had to the downside. So first of all we have start of a value gap, boom, 1 to 9, equilibrium of the move down, 1 to 17, end of a value gap, 1 to 27, bro. Literally all the way to these draws is 1 to 45 risk to reward ratio trade. Of course I don't trade pre-market, a lot of people do. For me it doesn't make sense, but again, like, and even if you place your stop loss a little bit higher, like on this eyes, 1 to 20 risk to reward ratio, just crazy ass trade, But again, just showing you that this is a high time frame retracement. That's why you can go to 5 minutes. But I was expecting a low time frame retracement. That's why you should have been only on 1 minute and not looking for the 5 minutes, And that's something I've been doing wrong. And now I learned that, because really backtesting, I didn't learn that, because of backtesting, it's obviously these conditions that we have, because we have news yesterday and everything, don't happen every day on backtesting, and like this happened right now, and I had the opportunity to learn from the market. Again, like the best teacher that you have is not your friend, is not TGR, is not ICT. Of course that's good for you to start learning, but the best teacher after that, after you know your strategy, after you know risk management, after you know your psychology, is the market. And your experience in the market every single day is going to improve you every single day, so that you become a better trader every single day. And yeah, that's basically it. I don't want to steal too much of your time. Just, I hope you guys enjoyed the video. I hope you guys understood what I did wrong, what I learned today, and what you can learn from it as well, because my lessons are also your lessons, and hopefully you guys learn from my mistakes as well. And that's basically it. Again, I was expecting this kind of retracement, but even though this is a low time frame retracement, I should have been just on 1 minute here, You know, if this retracement happened here, I should have been only on the 1 minute and not on 5 minutes, expecting a reversal. You know, I wasn't expecting a reversal of trend. I was expecting a small low time frame retracement. So I should be in the 1 minute, not in the 5 minutes, because the low time frame retracement happens in 1 minute. So that was my big mistake after all. And again, like when I lost my first trade, I should have been, and that's something I will change as well, is that when I go to the first trade and they take profit and then break even, I need to step back, higher time frame, and see what's happening. So I go to 1 hour, what's happening? We're going low, we're going down. We haven't even filled equilibrium yet. We haven't even filled this fair value gap yet. We have all these lows down here stacked. So maybe my bias of London session manipulation reversal, New York session continuation, maybe it is right. So I go to the 5 minute. What do I see? Fair value gap. 5 minute fair value gap. Then I go to the 1 minute. Why? Because I'm already at the fair value gap. At the 5 minute fair value gap. So if I'm waiting, this is my continuation confluence. So now I'm waiting for a confirmation confluence for me to enter. A break of structure is enough. I could have entered just on this. But if you're waiting for more, of course, if you're waiting for confirmation, then retracement, and then confirmation again, confirmation, continuation, confirmation. You have right here, boom, break of structure again, like I explained this again. Then order block, breaker block, equilibrium, and fair value gap. Break of structure again, not the break of structure again, but inverse value gap right here again. Enter on a bitch, stop loss in a place that makes sense for you, which for me, it's on this equilibrium of value because price could go up, sweep out more liquidity and move lower. Bro, your first take profit is these 5 minute lows. It's 1 to 4 risk reward ratio. So yeah, 1 to 2 risk reward ratio, equilibrium of value gap. This is the trade to take. Not the small retracement, but the big moves down. That's really what you need to learn and what I learned today. And exactly, that's really the video. Like, I'm doing these videos to help you guys, you know, so that you guys learn from what I'm doing wrong. And I did a shit of ton mistakes when passing my funded. Of course, last week I got a winning streak, which helped me pass my funded quicker. But now I'm in a losing streak. And guess what? Every single loss is a fucking lesson. And I'm learning every single day. And bro, like sometimes some people will look at you and say, oh, like you're losing so much. Are you bad at this? No, bro, I'm getting better, you know, because every single loss is a lesson. And today I learned a fucking lesson. Not a fucking lesson, I learned shit ton of lessons. You know, small retracement, low time frame. Not only that, when you lose a trade, try to step back, because I didn't lose a trade, it was a break-even trade. Step back, look at what the market is doing on the high time frame, and reevaluate. What was my initial bias was actually mixed. You know, first I was bullish because market went down, but my overall bias was bearish because of again London session manipulation reversal, New York session continuation. Not only that, I wanted to feel more of this equilibrium, more of this 1 hour fair value gap, which exactly happened. So after this fair value gap was filled and I got confirmation, I should have entered bearish. And even if I took the majority of my protected profits here, it would have been a 1 to 2. So again, a much better trade. But you know, I think it is what it is. Like, I did my mistakes. I cannot change the past. It's already done. What I can do now is improve for the future. And again, this video is super long, but hopefully you guys enjoy it, because it's a very good fucking video. I think it's very good information, and hopefully you guys enjoyed it as much as I did making it. So, and yeah, let's. My hair is completely mess, bro. I'm the Clash of Royale Meg without his hat. So yeah, that's basically it, guys, for the video today. Hopefully you guys enjoyed the video, and yeah, I learned a shit ton. Again, like I have a shit ton of things written in my notebook today, 3 pages of journaling. That's for a reason. Again, like I journal way more when I lose than when I learn than I win. We are in a losing streak this week. We had 2 losses and 2 wins, but 2 small wins and 2 big losses. So kind of big losses again. Like I've been managing my risk quite nicely, which is good. And then yeah, again, if tomorrow we have a good trading day, I'm going to enter with more risk. If we don't, it's okay. Let's see what we have for tomorrow. I don't even know the news tomorrow. It's right here open. So if my bias is clear before the news, I'm probably trading before the news, being aggressive with it. If we don't, I'm waiting for the news and then acting based on that. So that's basically it. But again, if I'm aggressive, lowering the risk always. And again, we have lost. I think we are down $500 on the funded account, which is not great, but it's not the end of the world. 1 win easily eats all those losses and makes it much more money than that. So again, risk management is very important. And again, even losing today, out for the day, that's really the discipline you should have. And losses, you can have losses. Again, if you need to interpret them as lessons. learn from them and never do those mistakes again. Because if you keep if you, every time you lose you make yourself more efficient, bro, like it's impossible for you to keep losing, because you're just going to make yourself more efficient every mistake you do. So you're going to improve, bro, and that's really the thing you need to learn from it. So yeah, hopefully you guys enjoyed this video. If you did, make sure to leave a like, comment down below. Thank you for the feedback you guys have been giving me to the channel lately, and sorry for speaking maybe too quickly this video. Again, just a little bit exciting because a lot of information, and sometimes I try to put way too much information for you guys way too quickly, and really that messes up everything, and you guys get a ton of information and you guys cannot understand shit because I'm speaking way too quickly, and really that's what sucks. But yeah, I'll try to speak slower next time, tomorrow hopefully. Let's see how what the market does. And yeah, done for the day, guys. Hopefully you guys enjoyed the video. Make sure to leave a like, comment down below what you guys think, and yeah, see you guys tomorrow. Bye bye, guys.